Deuteronomy chapter 31, verse 6. Be strong and courageous. Do not fear or be in dread of them, for it is the Lord your God who goes with you. He will not leave you or forsake you. 2 Corinthians chapter 1, verses 3 to 4. Blessed be the God and Father of our Lord Jesus Christ, the Father of mercies and God of all comfort, who comforts us in all our affliction, so that we may be able to comfort those who are in any affliction with the comfort with which we ourselves are comforted by God. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me.
Good morning, everybody. Hopefully y'all doing well. Back at it again, right? We got 5 things pretty much we're gonna really focus on. Obviously, the risk on, risk off, risk on process, Power 3, market maker models, kind of just the same stuff. Higher time frame for those that may be new. What's up, Yasin? Good morning, Fritz. What else are we going to go through? We're going to go over a bunch of stuff, right? Same thing as every week. Hopefully you guys didn't have too crazy of a week last week. It was pretty nice, right? We definitely were able to walk it like a dog, as always. So hopefully you guys didn't get too messed up with the refusal for price to go higher in the indices. At least overall, right? And we will talk about more details in a little bit. Let me know if you guys can hear me okay. See everything okay? Says my connection is not excellent for whatever reason. It is like raining right now at my house. So we'll have to see how that goes. Okay, what about the visuals? Are the visuals okay? So yeah, let me see if the visuals are okay. Looks good on my end. I don't know why it says good connection though. It doesn't say excellent anymore. Yep, everything's perfect. So can you guys could see the words in here? Can y'all see the words or the letters here too? I gotta double check because it's on my end saying it's good, not excellent. I'm not sure how I feel about that. Visual's good. All right, I'll take your word for it. But yeah, so as always, we start with the news, right? And this week, obviously no news on Sunday. Wait, let me see. Up 4%. Oh, nice. Good job, Fritz. Up 5R. Beautiful. Beautiful. That's awesome. Did you guys participate in the short? Right, the dive down below the weekly low. Or did you guys catch the early buy? When we go into great detail today about the indices, you guys are going to really see, as most of you guys have seen over the last year, week to week, I mean, the things that we look for, I mean, it's undeniable, you know, and it's not overly complex, hopefully. And if you guys feel it is, at any time, obviously, you can ask me questions, and we can keep it simple, as it should be. All right? Let me try something real quick. I had 1R trades in London. Okay, you traded London and PM session throughout the week. Yeah, there's nothing wrong with London, right? That's where I started. That's where I got my first funded account with FTMO a while back, a couple years ago, until they removed everybody that was in the U.S. for the most part because of regulations. But yeah, FTMO is pretty good. They've definitely become competitive also. But yeah, there's nothing wrong with London. It's good to know what's happening in London because obviously that's the start of the daily range. We'll get into more detail about all these different components in a minute. But yeah, so news. We have news at 5:30 a.m. Pacific Standard Time on Monday. So we'll see what the impact's going to be. We do have some FOMC people speaking. It's kind of like a spread out news schedule. 5:30, 6:37, 6 o'clock too. Pacific Standard Time. So we'll see what happens. Remember, every time we look at this, what's one of the first things we're trying to observe or think about while we're looking at the news and what days have news, which days don't? What's the first thing we look at? Or what's the first thing we think about? Or where should our mind go instantaneously? Fritz said weekly power 3. You're absolutely correct. So if we think power 3, if we're going to, let's say, go lower, and price continues to tank in the indices, the first start of the week, right, we may use Monday to manipulate, or Sunday and Monday to manipulate. Maybe it runs up a little bit, or maybe it opens up here, rallies up, maybe it takes out Friday's high, right, and then it tries to go lower. We do have SMT here, okay, so we got to keep that in mind. But when we start the week, like Fritz said, we got to think of weekly power 3. So if it opens up and it is going to go lower, right, we would want to see it go higher first, right? Target, and what would we look to target if we're looking for that manipulation Sunday, Monday going into Tuesday? Sometimes it bleeds into Tuesday, but we just got to keep these different elements in mind. But what would we look for, right, in terms of targeting? Right? What are some ideas that we would like to see price reach into if it is going to go opposed to, say, a downtrend? Right? Most recent highs. Okay, what else? What else can you guys think of? What else could you see that would be reasonable, right, for it to reach into? Near-term highs, yet the highs are definitely something. But what else, right? If price is going lower, and we're looking for price to, give us a power 3 for the week, on the weekly range, what are some levels that we could look for aside from highs and lows, right? But yeah, highs and lows are part of it, obviously. But what else? So in general, we'd be looking for an opposing PD array, right? Highs, FVGs, order blocks, they're all obviously PD arrays. But if it's reaching up, it's not just reaching for highs. It's not just reaching for just something random, right? It's going to always be looking for an opposing PD array to the downtrend if it's going to go lower, right? We're not making any assumptions yet. But looking at the news, right, Sunday, Monday, could look to target if it was to go lower, which again, we'll dig deeper into the whole analysis. But if it was going to go lower, we'd like to see it run higher to a premium array, right? And if we were looking for it to, go higher, especially if we have like an SMT like this, we would definitely like to see it open up and reach lower to a discount array or some type of low, right? Because that's counterparty liquidity. That's discount or buying low to sell high, or to buying low, to sell high up here, right? and then we're selling high, and then to buy back lower, right? To basically take profit towards the downside. So a premium array to a discount array if we're going lower, discount array to a premium array if we're going higher. Thinking of power 3, right? You got to obviously keep in mind the open price. So below the open price, what kind of PD arrays are below the open price if it's going to go to the buy side? Premium or discount? Right, should be a fairly easy question, right? Discount, exactly. So what discount arrays could we look at from this time frame just right off the bat? Right, we obviously got the low. We've come off of this low, and there's SMT. But what else, if the new candle opens up, what would we potentially look for if, we did want it to go higher and observe bullish power 3, right? If it opens up, we got our little candle. Midpoint of the wick, exactly. The quadrants of the wick, right? We have this one. Obviously, it's overlapped by this one, so we'd have to keep in mind the 50% levels. They're relatively close. Ideally, we would like to see something like this happen if it was to go higher, right? Maybe it has a down candle there just to, accumulate a little bit more in there. He said there is a void as well to the left. Talking about the NASDAQ? Partially closed. Oh yeah, you're talking down here. Yeah, so it just really depends, right? When we have SMT, we got to definitely observe the relationships, right? But again, thinking of power 3, if we were going to be bullish, this is the type of thing you'd want to try to visualize if we were trying to be bullish. Open up, go lower to a logical discount array on this higher time frame, and you map that out, and you try to see, okay, what's the response going to be if I'm assuming bullishness? If you're bearish, right, obviously you'd like to see it run up a little bit, right? Try to maybe target this high here. Maybe it does 2 candles, right? One like that, and then another one. Sunday maybe does this. Monday may get us into the high. And then, of course, it may start to tip over going into Tuesday. Maybe it runs a little further going into Tuesday. The line in the sand for bearishness to be basically turned off, if we were going to be bearish, right? If this was, the idea that we were trying to observe with what we have on the chart, we obviously have to look for 3 PD arrays above us. We have a new week opening gap. We have a order block, right? We do have a gap here from this high to that low. So that's obviously a gap itself. We have this wick here. All right, so basically what we're doing right now is mapping out premium arrays. Okay. And then, they're going to be used potentially for the news schedule, right? For us to anticipate what the news schedule could potentially present us with. And then looking at the red and orange folders, most of the time when you see, days that don't have the red folders, those will probably be setup days. Early in the week, some of these news events could be looked at as the manipulation phase, right? Obviously with the news events. So it's going to be part of the manipulation potentially. So this is kind of just how you want to think about the weekly power 3 when you're looking at the start of the week. Where is price currently at? Where's the highs and lows, like Fritz said, right? The most recent. Where are our premium arrays? Where are our discount arrays? Where's the range that we're trading in currently, which would be this high to that low, right? We took buy stops here. Well, yeah, I guess we kind of peaked up above it. We do have a change in state of delivery here. We have another change in state of delivery below this low, right? So this candle. So again, we got this wick. We have the fair value gap. We have a new week opening gap. We have this wick to the downside. We have this wick to the downside. So we're in between these two ideas. All right. It has broken down twice, right? So we have a double change in state of delivery there. One here and then one here. Okay. And we do have the SMT that we have to pay attention to, obviously. So again, going into the start of the week with what we just observed, we can now start to paint what could potentially take place relative to the news, like what role each day can have with the news events associated within the weekly Power 3. All right, it's the same thing for every asset. You can do the same stuff for everything. It's a very universal idea. But these are the first starting ideas that we want to look at, right? Where is the close of last week, right? You're going to have to mark that because obviously our new week opening gap, our Sunday's open price is also the Power 3 reference. So, best sells come from above. Where above? In a premium array, right? After it's taken some liquidity in like the early stages of the week, if it's going to be a bearish week. And then the reverse is true for bullishness. So again, these are things you want to keep at the forefront of your mind foundationally so you can get a feel for how you're going to navigate price. And then, of course, the news acts as a scheduling tool. Another thing, too, just a reminder about the news acts as macros do on the lower time frame, but for the higher time frame. Big moves generally come from times where there's institutional sponsorship. Right, and when does institutional sponsorship come into the market? Well, with news events, right? So again, similar to how macros are used on the lower time frame, the higher time frame macros, right, can be looked at on the or from the economic calendar. That's why it's so important. ICT has put a lot of emphasis on the economic calendar, saying that it's a timing tool. If that's the case, again, it just makes sense how the news can be used as a macro for the higher time frame delivery, right? So if we're looking for example, a way to use this, if we see the news events and we come over here to the chart, right, we can think, okay, well, we may run up and, like I said, use this portion of news to push us up into that whatever level, above us, like an order block or whatever, previous high. And then, of course, towards the end of the week or towards the middle portions of the week, this may be a start to the displacement because it's got the first news event. If this was an NFP week, right, so we'll talk about NFP protocol in a second too, but if this was an NFP week, right, we traditionally just be looking at it from this lens, right? Tuesday, Wednesday generally can be the expansion. Thursday, Friday is the reversal generally. If we hit a opposing PD array to a downtrend, right, like a bullish PD array, maybe it targets down here, maybe it sweeps this low, comes into this wick on Thursday and Friday, and then maybe it looks to reverse, right, and come back into the range. Right, so again, these are some mindsets and perspective around news, how to view Power 3 from the start of the week, how to start the week, right, the very first thing you should be thinking about. Hopefully it's not too complex. Of course, let me know if you have any questions. But again, this is super foundational, super powerful. But we'll get into that in a little bit. So in terms of NFP protocol, the risk is cut by half. Okay, no matter what. If you do want to push your trades, you push them at the beginning of the week, and then towards the end of the week, you really mellow out. Right, you pull back on the engagements that you have because you just never know with the NFP delivery. We do have some tentative still, even though the government's open, which doesn't make any sense. I'm not too sure why we still have the tentative. Looks like they are for certain, though, when it comes to the NFP delivery. And then Friday, of course, has PMI. PMI is pretty aggressive. So again, if we run into some type of obvious target, right, if it runs pretty aggressively throughout the week, and then of course runs into Friday's PMI, depending on what comes out and where we're at in price, that'll give us a determination as far as whether we're going to have something something similar that happened here on Friday, right? We called the TGIF live with my private group, as always, right? So we were prepared for that. Hopefully you guys were too, and were able to map out the delivery that took place because it was beautiful market maker buy model, beautiful TGIF stop raid at the open, right? That's where the low was formed at 6:30 a.m. Pacific Standard Time. It was also inside of the quadrant here on this weekly wick, which you guys can see here. And then, of course, we kind of pulled back into the range after we pulled the start of the week higher, right? We use this order block as a potential validation tool. This order block, the new week opening gap, and then of course this one up here, right? The fair value, the gap that was up here. We did assume that we may look to reach into that, then go, right? If it was going to short, and then of course if it overtook this regular trading hours gap, which you could find on the lower time frames, go click the regular trading hours. We've been identifying that because it's wide open. It's inefficient, super inefficient. And that looks like this, or wait. So if we come here, go to regular trading hours gap, just so you, for completeness sake. Not sure why it was so small. Right, so yeah. So at the start of the week last week, that's what we were looking for. We wanted to see if it could get us up into that. And then if it was going to drop, I would have preferred that. But the thing is, with what we basically had, if we zoom out a little bit, there was definitely SMT at the highs, right, as we could see. If we look a little bit closer too, let's see, was there SMT there too? So it wasn't really much SMT here, but there was SMT with the gap up here, right? The Dow just aggressively repriced through the high, leaving the SMT. And so this failure swing showed that the NASDAQ and, well, the NASDAQ itself was the weakest out of the three, right? This high was violated in the S&P. And we kind of left that, the failure swing, right? And then, the whole drop that took place, once it broke down below this low, we targeted this trend line liquidity here. We did talk about that pre-market. And then, of course, if it was to fail this, this became an intermediate term high. This turned into a long-term high, right, relative to some of these lower time, like this time frame, the 1 hour. All right. And the only way that, we were going to be able to go back higher, right, we looked to see if this was going to be swept first and then watch the response from there. We did point out this as well as a inefficient price delivery, and if it was to break down through that, it was going to reach for the low, and we can see that that's exactly what we got. And then of course, going into Friday, right, we had a fast London session, and then once we swept that low, right, we had a lot of higher time frame confluence. You see the 75% of the weekly wick. We stopped there, inverted this fair value gap, treated it as a balanced price range, and then just ran up to sweep out people from London. Basically took London's high and kind of came into the new week opening gap up there, right? So yeah, that's kind of the business from last week. And let me change this. Do you guys have any questions? All right. Yeah, we'll come back to this when we get into it in great detail. But yeah, as always, we got to start with the bonds and yields. So we're looking at the bonds here. It's kind of pulled back into the range right here pretty solidly. We're starting to see up close candles get violated pretty significantly. We do have a monthly bullish order block here we got to keep tabs on. If it was to break down below this low on this weekly chart, long term, I'm definitely interested in trying to see if we can get deeper. Right, and then of course if it inverts this, it's even more reason to target this trend line liquidity. But before that, obviously we have, all these different lows. It's a weekly chart, so each one of these weekly lows can be looked at as a target. If it's going lower, all the lows become targets. And, going higher, we got all the highs that become targets too. Very simple way of looking at targets. because it's very easy to get lost in price action. But the liquidity mapping idea that I have in both communities, the free and the apprenticeship group, I label it there for you guys to go and study. Important liquidity, because it's a question I get all the time. How do I determine targets, right? Like, how can I find a target every day? How is it true that there's a trade every day potentially? And how is it true that there's a framework I can use to target that target pretty much every single day, right? And that list of liquidity that I give you guys is vitally important. Over the years, I've discovered that my price navigation abilities were rapidly increased because of, well, for one, market maker model understanding, right? The market maker models and the liquidity mapping. Those are two things, and Power 3, I guess you could say. Me focusing in on those things made it so navigating price became a lot easier. So what does that mean? That means that it brought me clarity early, because I kept my focus on those specific areas. And then everything else just kind of meshed well. So if you're just starting and you want to know what to focus on, 2022 model, okay, the 2022 information, and then Power 3 intertwined, right? And spend a ton of time on that. There's a lot of videos. Okay, there's a lot of content, lots of people on the internet, lots of this, lots of that. If you narrow your focus to those things, the 2022 model, Power 3, and then of course eventually learn market maker models, I do encourage you going through the 2016 ICT content, because this is a language, a computer coded language, and his mentorship gives the language, right? And mentorship, right, or assistance that's effective is, by you being with someone like me or whoever else is live doing this type of stuff, walking you through the different elements. That's real mentorship, that's apprenticeship. It's not videos, because a video can only take you so far. Applying things real time with someone that proves that they know what's happening, that's priceless, and you can't just, it's a good way to borrow experience. And it's the best time to be a trader right now, because there's a good amount of people that have proven. There's obviously a lot of idiots that aren't even worth listening to. They're just good marketers and have Lambos that they rent and all this to kind of pull you in, which it pulled me into trading. But at the same time, a year in, I realized that those people are most of them are lying, and they can't really do what they're claiming they can do, and they won't even go live. They'll just show you MT4 screenshots, and you want to be very cautious of that type of stuff. Okay. But yeah, hopefully you guys get value from the stuff that I do here. I do try to make it a point to give you as much as I can. Those of you in my private group, great job last week. Just wanted to give you guys your flowers. You guys did phenomenally. I think I had 3 people pass funded accounts within like a month and a half, which is pretty insane. If one of you guys are in the chat, definitely let the YouTube family know that I'm not lying. That what we're doing here is absolutely, it absolutely has value. And I'm grateful to see a lot of your guys' progress. Fritz, Tony, I'm not sure if Tony made it today, and a bunch of others, right? Yasin, you've been with me for a little while. Hopefully you've been getting value too. And, welcome to anyone that's new, but, what we do here is undeniable. And if you guys do get value, definitely want to remind you guys to like the video, subscribe to the channel if you haven't already. It helps me reach people just like you guys, and it puts me in front of people that want to learn, and if they stick around, there's a crazy amount of value that's provided here. And I love seeing the success stories. It's not about me, it's about you. I'm just here to try to be the best conduit I can, like ICT says, and get you guys to focus on what's truly important, right? And I hope I've been able to do a decent job at doing that, and I'll continue to try to do that. Yasin said, absolutely. I appreciate you, bro. I appreciate your kind words, bro. I'm glad you guys get value. But yeah, with that being said, again, I'm definitely wanting to watch this low. If we purge that low, we'll have a breaker here. And so the only way that I would be looking to get back in line with bullishness is if we can violate the down candles here from this high to that low. I mean, you could use the bodies if you wanted to, but I mean, I'd probably encapsulate the whole entire range. I would prefer to see this lower candle, if we got below it pretty aggressively, to stay respected. I wouldn't want it to come up into, too much of the range. I guess we could say that I would permit as far as up to here, because if we get down below this, we then have a wick too. We also have an inverted fair value gap, and things just start to pile up. We got up candles here. If we move up to further time frames, we have an order block on the weekly, right? So we can kind of see how the PD arrays from higher time frame as we go lower. Each time frame has a story and a PD array that it's visually showing us. But when you see like a daily PD array move up a little bit, see if there's other things that justify it, move down a little bit, right, to see kind of what the lower storyline is as well, and what highs and lows you could look at and see. Let me see. It's really actually caught the trend going up. Oh, nice! You caught the move going up and into the short, which is pretty awesome. Good job, Tony. S&T 25, 10, 30 year. Yeah, possibly. We'll look at all three of them in a second. But yeah, so again, from this weekly chart, that's kind of what we have at our disposal. All of this other stuff doesn't matter. All this stuff doesn't matter for now. We got this range low to this range high. That's the current dealing range we're inside of. We are inside this larger one, but since we're right here, we definitely want to observe how it's going to treat these levels. We have a volume imbalance, which I'm assuming is a new week opening. Yeah, it's a new week opening gap, right? This close here of this candle and the open here on this candle. So there's like a little gap in there. We also have this gap in here. So, we'll keep tabs on that. I wouldn't be surprised if they try to get up there. But for now, we need a serious change in state of delivery, right? If it takes this low out, leaves an order block, then changes above this high, we would then try to monitor this order block and how that would be respected or not to gauge whether we're going to continue to go higher, or if we were to get down below it, if it trades into this order block bearish here and it respects the midpoint, that's a good indication that we're going to keep going lower, especially if we get down below this. This it's not required to be traded into if we break down below this low, because again, this on the higher time frame above the daily chart would turn into a bearish breaker, right? If we move up, well, we can kind of see these consecutive up candles move up even further. Like I said, there's a bearish order block there. So longer term, if it was to trade into this, if it violates the 50% of this and stays above this down candle, and gets back above the fair value gap here, obviously we could start to then build the narrative back towards the buy side. But for now, right, we're going to have to observe how this low is treated. And if it violates this low, I'm pretty confident that we will end up targeting this trend line liquidity here. Right? And then we'll kind of see how deep it would like to run into that. Okay? If I could find... Right, and then of course we got the low here. Got the gap in here. Got new week opening gap here. New week opening gap here. Right, new week opening gap here, here. So if it violates it, we're also violating numerous new week opening gaps. So again, that's a good way to understand if we're trending or not. When multiple new week opening gaps are getting traded through, when multiple bullish PD arrays are getting traded through, when swing lows are being violated, when higher time frame order blocks, breakers, fair value gaps that are bearish are being respected, if we see inversion levels, right? All that stuff is telling us that we're going to continue to be bearish, especially with the 2 changes of state of delivery, if we could identify it, right? Like one here and then another one here, okay? Alongside, so all that stuff put together helps you build your narrative, right? Or start to build the narrative as we, walk forward. So hopefully all that makes sense. Yeah, hopefully all that makes sense. Now let's pull up the other 3, or the other 2. So if we go to the weekly chart, we identified last week, for the last couple weeks, this fair value gap here. We can see how it's been pretty impactful. It's traded both sides, buy side and sell side. We're still spending a lot of time in this monthly fair value gap, kind of just resting at the 75% of the quadrant. We do still have relative equal highs, but we also have trendline liquidity down here. If we look at these highs here, there is a slight SMT, right, with these highs here. And obviously that has led to, or had somewhat of an influence to push price lower, or just kind of justify the push lower. So we've taken a quarterly high here, right? So it took that quarterly high and then aggressively repriced. Very similar to how the DXY took that high and then retraced, right? So this just kind of drives home the drill that I mentioned a couple times this year, taking the liquidity mapping stuff, right? Just like the list, and then going into your back testing, looking at how, when these higher time frame levels are taken, what is presented, right? What can you expect or anticipate, right? Generally, it's not just going to go higher, and it's not just going to go lower. When it hits a significant PD array, it's either going to be triggering in a counter trend move to continue, in this case to go higher, reach for external to internal, or right, it may just blast through it a little bit further and then not respect it at all. And that tells you you're in a pretty heavy environment, or a pretty fast moving market. But I mean, this is healthy here, right? This is what you generally want to see when a higher time frame PD array is met, or when a higher time frame high or low is met from that daily, weekly, or monthly time frame, or even quarterly, right? The 3-month chart. So the whole entire quarter, the target for the quarter for 3 months straight ended up being this high here for this asset, right? Does it mean every single day was pushing in that direction? Obviously not, right? But the overall direction, the idea for narrative on a large scale, long term, like 3 months at a time, was to try to get price to reach up here. And we did talk about this for a couple weeks. When we got this this movement here that got above this high, when we were seeing these order blocks hold in price, right, we continued to press for price to go higher. And I had this marked off. If you go back and look at some of the older videos around this time, we talked about this, right? We talked about it before the fact, and then of course, the bonds and yields have kind of been a mess, but nonetheless, we eventually got up there. And then when we got close to it, I said to watch the high, watch the response. And what happened? We saw it hit it and then reverse. That's why I said to watch the response, right? Because external range was taken. We were exceedingly bullish on the DXY. And then once it took it, right, external range liquidity taken, start to think internal range liquidity is going to be targeted now. And then if it continues, so be it, right? Any decline like this in a bullish trend is a counter trend move. So once this high is taken, you know that if you're going to seek sell side to try to continue to buy again later when it hits a PD array, right, opposed to or a PD array that's in line with the bullish movement, you'll know that your risk will be managed going into it, and then once it gets back in line, you could be back to normal risk. You obviously don't have to 100% do what I'm telling you right now with the risk. It's definitely recommended though, especially if you're new, because there's a lot that goes into counter trend trading, and you don't want to needlessly hurt yourself and then start doubting yourself because you weren't looking at the big picture and you were pushing too hard, trying to force buys when price is not always just going to go one-sided, It's going to go higher, lower. Premium array to discount array. External range highs to internal range fair value gaps or order blocks, right? Or even lows, right? Because they got to set up counterparty liquidity. And then, generally we can see external range get targeted again as well. But yeah, so coming back to this. So yeah, that little SMT in there definitely played a role. So we took external range liquidity and then we started to seek internal. If it was going to be bullish here, it should have been able to hold here a little bit stronger. This is not indicating to me that we're overwhelmingly, willing to go higher, but it's also not overwhelmingly confirmed that we're going to really drop and target something like this. Once we break down below this, that changes the state of delivery on this larger time frame. So you tell me, is a 5-minute change of state of delivery in the grand scheme of things more important, or would something like this be more important if it gets traded through, right? For narrative purposes, right? Obviously, executions and whatnot, the lower time frame becomes a little bit more significant, right? Not more significant than these higher time frames, but on a day-to-day overall navigation idea, the lower time frame obviously becomes important too, right? They all have their own storyline within this larger one. Okay. So again, like I said, if that low's taken from this weekly chart, if this is taken, that's a change in the state of delivery from this larger perspective. So that may end up being significant, especially if we were to also invert this fair value gap on the weekly chart, and then also start to, use it as resistance. And then especially if we see the yields go higher, those are even, those are reverse correlated. It's like euro versus the dollar, right? This is the type of relationship that the bonds have with the yields. And the ticker is right here. Good morning, Mike. Yeah, if you guys haven't taken down these, some of these that maybe you don't have, right? If you haven't taken them down, definitely screenshot it. You don't want to not have these, because you want to be able to follow along, right? 5 and 10 hasn't swept past low. A week from 3rd of November. Yeah, right here. But yeah, we're going to have to see what it has done, though. It's basically inverted this fair value gap. So this SMT, in my opinion, will be fully trustworthy back to the buy side if we can invert this again or reclaim this. Well, basically invert it, right? Because if it holds it and it breaks down below this, we have up candles here, down candle, that's a breaker. We have an inversion bearish fair value gap or a reclaimed fair value gap, and then we have a swing low violated. So how many PD arrays is that? Right, it's 3. And then of course it would also use the quadrant here in the monthly fair value gap, and that could be a resistance level. Okay. But for now we're sideways, so we need to wait for more information. So this is a good example of a market where, like say if this was the NASDAQ and it was doing this, right? We would be looking at the same stuff. It's all the same, We'd be thinking, okay, well, we got to get out of this consolidation. Otherwise, who knows how long it's going to stay inside the consolidation. It's the end of the year, right? So power 3, right? The last month or two generally caps the yearly range. So again, if this is going to, do that phenomenon, let me see, where is the start of the year? January 6th. So yeah, right in there. That was the start of the year. So it's just been a mess. It's like an indecision candle, or slightly bullish candle for the year. Right? And what has this done? It's pulled back into the wicks range here. It's all the same, even on the yearly chart, right? What has this done? It has left these lows. So this is an inside year for the 10-year T-note, the 10-year bonds. All right, it hasn't broken out of the range. It did break out of the range here for the 30-year. It's reacted off the 25% of the wick. Let's do the quadrants real quick. Kind of see that. See how everything is literally super universal, right? It happens on all time frames, all the different tactics, right? So yeah, it's kind of been a messy year for the bonds and yields, which makes sense because of all the news and new administration and financial adjustments and all that. But again, that's more of a huge picture for the whole year. Not going to be too helpful for day-to-day engagements, if at all, right? Just something very, very interesting to pay attention to, because when those levels get hit, I literally called the low of NASDAQ and all the indices this year off of a yearly order block, yearly bullish order block. And they used all the early news for the first couple months as manipulation, just like how we use Sunday and Monday for manipulation in the weekly range. You know, the beginning of the year or the first quarter can generally be manipulation for the year, depending on what the year's going to do, right? So again, you could see the universal effect with all these things that we talk about. People get lost on the higher time frames, going to the lower time frames, but you know, everything's working inside the higher time frames. But everything is universal, right? Like I said, it hasn't got a clear direction. We seem to be stuck now. So it's very, yeah, exactly. Remember, Mike, we've been talking about this in the private group, right? We've been saying how this part of the year, expect cracking correlations, expect sloppy price delivery, expect the difficulty level to feel like it's been increased. It's not that it has, like, increased in terms of difficulty. It's just there's a change in the overall characteristics, right? The condition, you know. So I mean, you can look at that as, you know, it being harder, a harder to trade environment. But again, everything is still operating generally the way it should. You just, you know, it's a little bit more high risk because of all the holidays and the cap of the yearly range, right? We're going to end the quarter in December. So we got literally a month from today. It's going to be a contract adjustment going into next year's first quarter. So December 16th, 15, 16, or 17th, right? With one of those 3 days, basically mid-December. And then that's when the new year starts. For the market, at least, right? So yeah, with that being said, hopefully it makes sense as far as what I'm looking for with this. Let's see if we can get down below this low. If it does get down below that, we have these up candles in here. This is a market maker sell model. That's what it looks like. Seems like we're in a second stage distribution. So we'll see if we can get a fast movement down below these lows, and that'll trigger in the potential for a bearish breaker. And the only way that we would be back in line with bullishness or know for certain that it's ready to continue to target the buy side is if price was to do something like this, right? Sweep the lows, maybe wick below it, but spend very little time and rapidly reprice, preferably taking out this high and breaking through the midpoint of the breaker that we talked about. All right, low, high, lower, low. 50% of it's like right here, okay? And then we got that swing high, like I said. So yeah, my attention is going to be here. See if we can't get it to come down into that. All right. And again, if we can't get down there, say, you know, these fail and create SMT here at the lows, and then we displace above something like this or get outside of this monthly fair value gap here, this pink thing, we'll look to see it invert and then look to continue to race towards these buy side liquidity targets. All right, but again, if they break these lows, we're going to look to target some further sell side trend line liquidity so on and so forth. I'm going to favor that opinion, at least for now, until we see how it treats a run below these lows, if that manifests, right? And if it doesn't, we'll stick to what the overall delivery has been. So that is going to be our game plan, and main game plan for the bonds, and the contingency idea, the if-then scenario going into the week. Because nobody knows exactly what it's going to do going into the new week. We don't know. There's an open that comes. News can happen over the weekend. A bomb can be dropped. Some craziness can happen, and we just don't know because the market's closed. So that's why the early parts of the week, it's also good to consider using it as intel gathering. Sunday's always intel gathering for me, for us in this community. Doesn't mean you can't trade it. I haven't traded Sunday in 4 years. Well, I traded gold like a month ago. Smacked the crap out of it on Sunday, which I showed publicly. But yeah, it's not ideal. So limit yourself in that way. Definitely study it though. Go in there and prove to yourself that what I'm saying is true, and you'll quickly see that it's not worth the stress. We have more than enough opportunity. We don't need every single day, especially on a Sunday. Let me see comments. Okay. Do you guys have any questions before we move on? And I promise we'll get to the NASDAQ if you guys are new. Right? We don't just talk about things outside of it. Right? We lead up to it. Right? It's a process. Just for those that may be new. Yeah, let me know if you guys have any questions. Maybe throw a 1 in the chat if you don't have any questions. And we can move on to the yields. Okay, I appreciate you, Fritz. Again, just another reminder, don't forget to like the video, subscribe to the channel if you support what I do. If you've gotten value throughout the year, if you've been able to achieve some accomplishments, and you enjoy your time here, it's much appreciated. It's obviously free, and it supports the channel. It helps me get in front of people just like you guys, and it's much appreciated to know that you guys enjoy the content and get value. All right, so again, thank you in advance. But yeah, moving on to the yields. Okay, so again, where's the most recent high, most recent low? Right? Where's close proximity PD arrays? Where's the high extreme relative to the range that we're in to the low extreme? We got some buy side taken here, previous candle, sell side taken here. We do have this larger range that we're hanging around at equilibrium with, right? If you take this low to this high. And what is the characteristic when we're in a higher time frame equilibrium? Who's been listening? Let me know in the chat what the expectation is. Or what is the characteristic that's common when we are at equilibrium on a higher time frame delivery? Just let me know in the chat. Consolidation at equilibrium, exactly. So is that generally high probability or low probability for the most part when we're at equilibrium like that? What could that potentially, keyword potentially, offer us in terms of condition? High probability, low probability. Low probability, exactly. So what do you do with your risk when we identify that we're trading at an equilibrium price point? Do you keep it normal and just push, or do you wait, or do you cut your risk? We got to wait. Okay, that's a good answer. And then, of course, you got to cut your risk. If you know that the risk is higher because intermarket relationships maybe are also confirming that we're cracked in correlation and we're trading at equilibrium, we need to push away from equilibrium, because once we get away from it, this will be generally the root of a move too. You'll notice if you go back and study higher time frame equilibriums, within, certain ranges. When price leaves that range, it doesn't do it at a random point in price. And maybe there's like a PD array or something that's near the equilibrium point, especially if you're bullish. There may be like a discount array that's accumulating inside of. And then, of course, if it pushes away to the buy side, a lot of times you'll, again, see that the equilibrium point was where price decided to run from. And then if you can couple that with a PD array, that's pretty helpful. Right? So that being said, we're looking at things from this monthly perspective. We could see how price has pretty aggressively respected this down wick here. So again, what do we think about the bonds, right? We think that, okay, they may possibly take out that low, okay? So if we're going to take out this low, what does that mean we should be looking for generally in the yields? If everything's going to be healthy correlation, if the bonds and yields are reverse correlated and we think the bonds are going to drop, what do we think the yield should end up doing? And again, the bonds, for those that may be new, the bonds influence heavily what the foreign currencies are going to do, what the indices are going to do, which is why we start here. And then the yields help us determine what the DXY is going to do, because it influences the DXY delivery. So that's why we start here and take, a decent amount of time talking about this and really trying to identify what these two markets are going to do, because it makes later on's analysis when it comes to the other assets, we have a fundamental back-end validation tool in the bonds and yields for those other assets and what they're going to do. And it makes like a bearish order block if the bonds are dropping and we're trading into a bearish order block on the indices, or if we just took like a high out and the bonds are dropping, right? But the indices took out a high. It can make it a little bit more likely that there's going to be a turnaround. Maybe not an entire turnaround where it changes the trend, but you can definitely anticipate. That's what you're learning here, how to anticipate, because we don't react, we anticipate, right? Let me see. I watch YouTuber blow accounts. It is sad people like watching. Yeah, it's like a circus. It's like a circus vibe, right? Like juggling fire or putting a knife down your throat. People are like, oh yeah, it's entertaining for whatever reason. But you can't make money with that type of entertainment. It's entertaining, yeah, of course. But yeah, it's sad. It sucks because we know how painful it is to blow your account. And imagine blowing your account like that, knowing deep down inside you don't know what the hell you're doing, but you've got like a small glimmer of luck, and you just completely disintegrate yourself on YouTube when you have a big audience. Losing doesn't matter at all. It's just part of the game, but I'm more concerned about the students. People on YouTube, I wish there was not so many liars. But because there is so many liars, it leaves a lane for people like us to be on YouTube, because what we do works, and we prove it. So hopefully some of them can be saved. We gotta be nice though, right? We don't want to be mean, but I was a victim of that type of stuff, right? Some people lying on social media, lying about their skill set, as I'm sure many of you guys have been victims of too. That's probably why you find a lot of value here, because you see the proof that it works, and it's a really organized process. It's not random. I've done this for 6 years, and I've been through a lot, and I know recently I've been able to definitely help a lot of you, and I'm grateful and humbled for that. And it's definitely something I never thought I'd be able to do. I never thought I'd be able to teach this stuff, let alone learn it myself and be where I'm at today. So I'm grateful for you guys and the blessings that God has placed on me and is in the process of placing on you. So yeah. should go higher. Yeah, so yeah, yields, if the bonds are going lower, yields should go higher. Okay? And if that's going to be the case, again, what could we use to justify that right now when we're looking at price? Again, first and foremost, think of power 3. Second, you obviously got to take the highs and lows, the most recent candles, because we're on these upper time frames. So we got that monthly high here. Go to the daily chart. All right, we're pretty close to it there. This was a market maker buy model. We called this out from here. I said if it got above this weekly fair value gap, if it inverted this gap, this monthly fair value gap, right? If it stayed above it, we're going to continue to go higher. If it stayed below it and use it as resistance, we would go lower. Because it broke through this weekly fair value gap, I said in order for us to go lower, it's going to have to break down below that. Otherwise, we're going to target the high up here. Targeting this high takes out an intermediate term high, lower high to the left, lower high to the right, trading into a fair value gap. So taking out this intermediate term high here is significant long term. And just like how the bonds may be reaching for their trendline liquidity to the downside, you could see the reverse correlation effect in the yields, with it now looking like it wants to go higher and trendline liquidity being above us. So again, this is the reason this is important, is because we're building a narrative, right? We're not just going to NASDAQ, looking at NASDAQ and just thinking about what it's going to do. There's things that influence it to do one thing or another. So that's why we sit here for, like about 2 hours, and we go through all the different components, because you guys want to know how to get clarity and trust your bias and narrative, right? You want to learn how to determine it consistently, like I've shown publicly for the last almost full year, let alone 3.5, almost 4 years in my private group. There's a method to it. I'm not just coming out here like Houdini and getting lucky. These are highly probable things that take place, and we're able to identify the components. And again, the results speak for themselves from the students, from you guys here, and those in my private group that have just been absolutely crushing it this year. Pulling out thousands of dollars in withdrawals. I mean, it's insane. And, of course, there's no guarantee. I'm not a financial advisor, and this ain't financial advice. But that's just what's been happening. So, again, this stuff works, and you're in the right place with the right concepts. ICT is the right concepts. He's also, amazing himself. Again, I'm just here to try to fill in gaps, share my wisdom, and hopefully it resonates with most of you. It won't resonate with all of you, and I already know that, because not everybody's willing to do the work that we do. Not everyone's willing to make the sacrifices. They're not willing to admit when they're wrong. Overcome the personal things. It's unfortunate, but it's doable for everybody. But you got to be coachable. You have to be willing to hear different perspectives, and stick to a model. Have an organized process that's proven to work, which ICT himself and myself and many others on YouTube, like Jade Cap, for example, we're out here really proving that it works and giving information that's not too overly complex, and it's a good thing that a lot of us are coming out publicly, because again, it's a tragedy what happens in this industry, and it's an amazing industry. ICT says that this is the highest level of financial literacy, knowing how to day trade, right? Or just knowing how the markets work in general. It doesn't have to be day trading. Because you could do many things. You could be versatile. You could trade options. You could do long-term position trading, swing trading, self-directed portfolio management for a retirement account, right? And you could just really rapidly grow it safely when you know what's going on with this, right? So the world opens up. So we need better people. We need to continuously have good people sharing the real ways of doing things, because all of us have been hurt in some way or another by some idiot on social media with the Lambo that they rent for a week and take content with, right, to sell some nonsense. So it's very important. Let me see. Fractal low on the daily to go up to 30. Makes it feel that many people are wasting time. Yeah, that's a big thing too, because you can't get time or money back. Yeah. Sometimes I wish that too, because, the more exposure, the more impact, you know, and the more success stories and blessings that I can pass along, because I've been blessed. God has blessed me. I've had a hard life to, start when I was younger, but everything worked itself out, and I'm grateful. And now I'm able to pass it on, which I never had anything that I could pass on to anyone that could be as impactful as this. And I'm grateful because, it's an added layer to purpose, and fulfillment, knowing that I'm able to help others. It's just something that profitable trading can't really do, right? I mean, it feels great to be profitable and make your own money, but it's definitely a different sense of accomplishment and appreciation when you're able to see something that you learned that was really hard to learn, impossible for most people, that helped change your life, and then you go and pass that on to someone else. It's a different type of appreciation and accomplishment versus just making money for you, right? To go buy this or buy that. It's bigger than us, when we're able to do stuff like this. So I appreciate you guys for giving me that opportunity to be able to do that. Because again, it's definitely going to continuously be one of the biggest highlights of my life. God's good and he knows the intentions. Yeah, I appreciate you saying that, Tony. I appreciate that. And I'm grateful for each of you guys as well. So yeah, with all this being said, I guess this will be pretty much all we really got to go off of. We don't really got to do too much more. It looks, pretty clear that this is what it's going to try to do. So we're going to keep our attention up here. Let me see, where's the gap? So yeah, the gap's right there. Let's add this. Okay, so that's my intention. We got this candle's high here, and this candle's high here. So we got relative equal highs with a fair value gap. So it's pretty likely that it could be targeted. If we break above this high here, right, this high to that low, all of that should be looked at as a potential BPR. We've gotten above this now, so this is an order block. In order for us to think it's going to go lower now and not reach for the highs up here, it's going to have to break down below this low. That would invert numerous PD arrays inside this area. And, we could use that to then justify further runs to the sell side if that was the case. But for now, it looks like we're getting a turning point to a market maker buy model. What is the target? The contextual target, we have the trend line liquidity and the respect of these PD arrays in here. Order block being respected here. Order block being created and respected here, here, here. So yeah, it's going to take a decent amount of downside displacement for us to want to try to see this go lower again. So that means, because this is the yields, right, if that's going to be the case, then this should have an influence on the DXY. The DXY may look to continue, going from external to internal and respect this wick, respect this fair value gap, and then, of course, this order block too, which is inside this large wick here too. Okay, so again, we're just going to have to monitor and see what that's going to want to do. And, we'll kind of go from there with that. So, yeah, hopefully this makes sense on the yields. But this is pretty much all I'm really keeping my attention on. Close proximity PD arrays. Friday's high, Friday's low. You want to mark that off. Previous week's high, previous week's lows. You want to definitely mark those off. And then mark off the gap in here. And we'll see if we can't open up. If it's a bullish move, bullish power 3, if it drops lower into this order block, we have this midpoint of this order block. So if we could drop into that, go below the open price, and then look to rally from there, again, that just goes back to the news, right? We got the starting news up until Tuesday. So all of this may be used for the manipulation. And then, as we accumulate inside this order block here, if it does choose to go down first, which that's what we want to see if we're bullish. Once it does that and then a news event comes out and we start to push again, then we can, based on the news, know when the right time is going to be for price to want to move. Because it's NFP week, the likelihood of consolidation is definitely there. So you don't want to discount that. Going in to every new week that has a NFP in it or FOMC, you want to make sure you're aware of that, because if you were smart money, put your hypothetical hat on. If you were smart money and you knew that holding price ahead of a massively impactful news event would probably cause the most pain on both sides, you'd probably look to manipulate it too, because the whole point is to make money for these people. So they're going to want to victimize you. And normal retail logic is utilized to lead them to the slaughterhouse. And we're not trying to, we're not trying to go to the slaughterhouse. We're trying to bring the potential victims away from the danger, away from the chaos, and manage things properly, right? So expectations are heavily important to realize. See, I'm sure a lot of you guys know. We talked about this all the time over the last year, so I'm sure that's preaching to the choir. Yeah, Fritz, that's a good point. It's not called accumulation for nothing, right? It's accumulating. So if price was to drop down from bullish power 3, what is happening inside this order block? It's accumulating orders inside that order block, inside of a discount array, or inside of a low, right? It dropped down. See the consolidation here? That was accumulation of buy positions, right, ahead of this displacement that inverted these levels, right? So yeah, that's a good point. It's not called accumulation for nothing. They also, let me see. I feel like setting a hard time frame with you made me think the same way I thought we will target daily vision. Yep. Wait. Made me think the same way I thought we will target. Yeah, exactly. Hey, well, when we're learning the same stuff, there's going to be a lot of similarities, and that's when you know that you're making massive progress. If someone you like, or like someone that's in a position that you want to be in, like ICT or me or whoever else, if you like what I do, like what ICT does or anyone else, when you're able to look at them, if you've watched them for a while, and they're calling something out and you already see things before they even say it, that tells you that you're making intense progress. And that borrowed experience is now becoming your experience. And that's the power in live calls like this. That's why, for the most part on my channel, I do live calls. I'll probably make more videos next year, touching on some foundational things. I'll probably make like a small course for YouTube, just like for new traders. And maybe an intermediate and then advanced layer, I guess. But it's just one of those things, right? The live calls I feel like are much more impactful. This week is going to be a lot of movement, and you have, I try to get you guys prepared. I hope I've been doing a good job of it too, because I can't take the trades for you guys, so I can only hope and pray that you guys hear some of the rules, hear some of the process or all of it, and see the value in it, and then you apply it and study it and backtest it, and then can see for yourself that my trust, although it can't be transferred to you, hopefully the experience I share with you, hopefully that's enough to get you to see that trust can be built. And then when you use it in your own hands, over time the trust will be built, and hopefully we can get everybody funded, right? It's no guarantees, obviously. Again, I'm not a financial advisor. This ain't financial advice. But I mean, you guys see the results, right? You guys see all these students coming out saying what's happening, and what's been of value here in the community, how they came here and changed their whole perspective, how clarity is achieved. That can be guaranteed. Clarity is guaranteed if you spend enough time here, especially in my private group with me one-on-one, because I mean, it's inevitable. and I've been teaching for years at this point now, and I feel I've evolved. I know what works. I know how to get many different types of students from all different experience levels, all different problems, at least to the level of clarity. And then once you have that, you have to walk the rest of the way. It's just like a construction worker learning from a construction guy, an apprentice, and then going and is now able to do their own jobs. It's basically the same thing, the same idea. That's why it's an apprenticeship. My private group. I mean, this is kind of like a mini weekly, somewhat of an apprenticeship. We got the prep calls and then the live trading session. So I'm trying to give everybody value, right? It's not about the money. It's not. By default, we're doing this to make money, so we don't even got to acknowledge it's about money. The more that we acknowledge and focus on and obsess over making the money, the less focused we are on trading well. We're more focused on, are we going to lose? Maybe we're never going to do this. It's never going to work. Whatever thought processes come into our mind. The default is to make money anyway. So if you focus on the process, what's the default? Just ignore the money, right? Because if you do it correctly and you have the right mindset and you put enough effort in and you're around the right people like you guys are here and around ICT as well, the default is to make money. We're not painting pictures here, just worthless activities. This is literally building the idea on how you can get to the point of clarity, and then how achieving these goals that you guys are setting out to achieve is possible, right? And how you can look or go about getting there. So it's not about the money, right? The money comes later. You have to have the process. Think about it. If a doctor that was in college was so focused on the money that he was making irrational decisions based on his education, right? And he was so focused on the money, and all of a sudden that makes him fail. How is that any different than someone focusing solely on the money here? The money's great, but it's a byproduct of you learning the skill set. Money is a byproduct of you becoming a doctor, right? Money is a byproduct of these things. That's why we're doing it. Doctors may have other motivations, though, obviously, like helping people. It's kind of similar to what I'm doing here. Maybe it's going to be something you guys look to do too, and try to pass the blessing along as well. I encourage you to think about it. But when you arrive, you want to be able to do it. Obviously, there's too many people that haven't arrived that are selling things that they haven't even proved to themselves works, and we don't need no more of those types of people. Is 30-year yield stronger than the 5 and 10s? Yeah, so similar to how... That's a good question. So with SMT, right? With the NASDAQ, S&P, and the Dow, if you have a bullish SMT at the lows, and the S&P is the one that makes the failure to go lower, and you're looking for bullishness, right? For example, right? Right, if this is the S&P and this is the Dow and the NASDAQ, because the S&P has 500 stocks in it, it's more heavily weighted, right? So if it's going to be a bullish S&P, maybe there's an order block or something here, and you see it like this, and the S&P is the one that has the failure swing, and you're expecting bullishness, it's a lot more likely that it's going to be dynamic, and it's going to drag these other ones with it. That's not to say that the NASDAQ doesn't show this phenomenon. It's just more likely, the heaviest likelihood of a S&T reversal if you're bullish, if the S&P itself has the failure swing. Okay, and then it's the same thing, for bearishness. Right, if the S&P has the failure swing, that's the strongest of the three indications that it's going to be a reversal, especially if it's like an order block or we peaked above a high or whatever the case may be. So that's important to understand, because when we're looking at the 30-year, 10-year, 5-year, it's a very similar thing, right? So if you have like the 30-year making a failure swing, like let's just hypothetically say we're bearish, right? If the 30-year has a failure swing to go higher, but these have higher highs, right? If we're looking for this to short, it's going to be more impactful if we see the 30-year give us that failure swing. It's more likely, I should say, right? And SMT is not a silver bullet, but again, it's one of those timing tools, validation tools with a PD array, right? Like if we're trading into, like a weekly bullish order block, if we can spot an SMT on the higher time frame at that weekly bullish order block, and if we could see that the 30-year is the one that makes the failure swing, that's a highly significant turn of events, right? And it's going to be pretty likely that price is going to run higher. And if you could see things like this, when something like that's being reacted from, and that scenario's underway, you can really trust that things like this are going to take place. And again, this is, not necessarily, there's no SMT really. Is there? Let me see. Yeah, no, there's really no SMT at the moment. Well, I guess there is with these lows here. All right, so I guess there's SMT from this perspective down to these lows. Is that aligned with that? Yeah. So the Dow made a failure swing, but the 30-year is part of the group that has the failure swing, right? And then, of course, we got this one that took the low, the Dow. So Dow took the low, or not the Dow, the 5-year took the low, and the 10-year had a failure swing, and the 30-year had a failure swing. So look at the response, right? The 10 and 30-year have made that failure swing, and look at what it's doing. It's pretty much doing what I've just described, right? And it's rapid. It's rapidly moving. So that's highly influential. And again, the yields dictate or have a heavy influence on what the DXY is going to do. So when you see something like this in the yields, what does that tell you about DXY? It's probably going to eventually look to have an interest to try to run to the buy side, right? And of course, it's not a be-all, end-all. You still got to watch what price is doing real time on the asset you're looking at. But it's just a good anticipation tactic to use. Mike said the knowledge you give away during live streams is crazy. Yeah, I wish people knew too. It's not everyone's cup of tea though. If I'm not giving a signal, I'm not like super like trying to be entertaining and all that. Hopefully you guys are entertained, right? We're not entertained, but getting educated. That's probably why. People on social media have TikTok brain, unfortunately, in this generation. But it just goes back to the likelihood of success in trading. It's very low because people they're not really serious. They like the idea of clicking a button and making money, but they don't like the journey to get there. Just like how many people want to be a millionaire, but most people don't realize that millionaires have less free time generally than a person that works a 9 to 5. Because you're in control. You have to make sure everything's running smoothly. So, the lifestyle's still pretty intense, whether you're working a job or trading. And for some reason, people think because of social media that being successful means that you get to just live on the beach with a laptop and just make millions of dollars every week just by clicking a button 10 minutes a day and live a laptop lifestyle. But again, there's so much behind that. With trading, it's a little interesting because it's not like normal businesses, right? So you don't want to be spending a lot of time trading. You don't want to spend like 10 hours a day. Studying wise, if that's something reasonable for you, it's unhealthy. I did that. I think it did benefit me, but it's not going to benefit everybody. All you really need is 20 to 30 minutes a day. 30 minutes to an hour, so you're not in a rush and you could soak up a good amount of information and backtest. But yeah, the lifestyles, it's just different, It does require work, though. It's going to always require work. And you got to make sure you do stuff like this. Like, this is a weekly thing that we do because this is how the business goes. It's how it's supposed to be ran. We got to constantly be attached or locked in, right? If we're going to engage, and if we take some time away, right? It does open up freedom, obviously. That's not to say that millionaires don't have freedom. They have the ability to schedule their freedom and they don't have to ask anybody for it. But, you can't be lazy if you're being an entrepreneur. You can't have a lazy mindset when you're trying to learn this skill set. The lazy are not rewarded. They're victimized, and they're the other side of our trades, because we're in the battlefield constantly. We're in boot camp all the time, especially in my private group here too on Sundays. So we're constantly prepared, and no matter what price does, we figure it out, but that's because we do a lot of work. We back test, we, go over weekly analysis. We pay attention to the higher time frame and all the stuff that matters. And then come game time, we're ready to take someone's head off, and when the opportunity arises, we're right there, and because we put so much work in, we use stuff that works. We've proven that it works. When we take losses, although it may be like a speed bump that's slowing us down a little bit to get to our goal, it doesn't mean anything. Business owners have business losses. Do they look to quit their business because some idiot stole food from their store? Or, maybe there's something that happens to the equipment. Do they just give up on the business because, something happened? Or I took a loss, a little small financial loss. Do they make it worse, right? Like, however they would make it worse, right? If something happened, like say that someone stole some of their chips. Do they go and take that product and just lose more just because, they're pissed off and make irrational decisions? No. Do they change anything? Maybe, right? To try to mitigate the problem. But you don't see business owners when they take business losses think, okay, let me just throw everything out, right? Especially if it's been a year or two of them running the business. Traditionally, the first 3 years of a business is unprofitable. So it's not much different in trading because we're building the business. We're building the skill set. We're learning, gaining experience, and, trying to grow as much as we can within the industry plus in our skill set and discipline wise, right? We all have different weaknesses and whatnot. But, you don't see them doing that. So it's not rational for us to do that, right? Just throw everything out because maybe something went wrong. It's not the right mindset. You know what I mean? But yes, let me see. We have stronger bias for bullishness. Yeah, for this asset, stronger bias for, or narrative for bullishness. I want to see if we can get up into this. Oh, whoops. Right. So yeah, hopefully that SMT idea makes sense to you guys. The 30-year has a heavier impact or influence when it comes to SMT. Same with the S&P. S&P has 500 stocks. The Dow has 30, and the Nasdaq has 100. So you can imagine things are more sensitive in the Dow, but more impactful when it comes to the S&P and SMT delivery. Okay, very important distinction. And then of course SMT, if we're on the indices, you use the bonds and yields to help confirm as well. And then DXY too, right? Because those relationships are important. So yeah, hopefully all this makes sense. I don't think there's really much more we need to talk about in terms of this asset. So yeah, let's jump to the DXY. So again, if we're going to see the yields go higher and the bonds go lower, right, we're going to want to see how this is going to behave. Okay, so we got this wick here. So there's two wicks here. Why would we use this wick? Why would this be the one that we look at? Because this is the biggest one out of the two. Okay. It doesn't mean that the levels on that smaller wick are not important, right? Or not going to react, but the bigger one is generally the better idea to observe. Weekly actually pull this. I think I had this earlier and deleted it. Yeah, so we'll keep this in mind here. So we got this fair value gap. Price took external range liquidity. Line in the sand is if we overtake this order block. If it was to violate that, that'd be a problem. Okay, because then we'll see that down close candles are no longer supporting price. So order flow may be, not in sync really to go continuously to the buy side until maybe a little bit later. But again, we have justification through the bonds and yields that the DXY should have a pretty strong likelihood to try to run higher. We'll see kind of what the impacts are going to be on the economy, because there's stuff happening that has been negative for all the U.S. assets and gold too, right? Gold and silver. I think it dropped a little bit, but we'll see if that if that wants to continue to drop for whatever reason. I think gold's going to stay strong. Right, we'll talk about that in a minute though. So yeah, with the dollar and all these things put in context, this high to that low, like we talked about, it's also an order block. So that range, high to low, all of that should be sell side delivered, buy side delivered, right? So that should end up acting as a BPR. It should not have to come back down beyond the 50% of this. This is already a massive retracement. Let me see. So yeah, the weekly, we got that there. Again, we got that wick. So the quadrant, 50% level. Hopefully that can stay intact. And of course, we got this daily fair value gap here that we used to help us justify the continued run to the quarterly high up there. Right? If you guys remember, we talked about that. Right? All in here we watched. If it was going to get below it, use it as resistance, we would target sell side. If it was to break outside of it and use it as support, we'd look to target buy side and then eventually target this high up here. All of that came to fruition. Again, that was all done live. You can go back and listen to it. It all started down here before this even was created. And then it created a type 2 dealing range, created an inversion fair value gap. Those of you in my private group, we talked about this being a razor model too. You guys can hopefully see it. We talked about it a lot recently, or for the last couple weeks. But yeah, so for us to continue to push this higher and know that it's ready to go higher and it's going to be trustworthy, we're going to want to see it break outside of this weekly fair value gap and then use it as an inversion. See if we can't get a wick or, whatever the case may be, reach into that and then continuously try to push us higher. We got this low to that high. Why this low and not this low? Because this is the most recent, most energetic fractal low to the most recent fractal high that triggered the retracement. So we can now see equilibrium of that range is right here. So we're kind of at equilibrium. Okay? So we're going to want to make sure we observe that. It's very interesting. Wait a minute. Where was the asset I was looking at? Is it on the monthly view? Yeah, oh yeah, it was the monthly view, right? You could see how low to high, price came down right at equilibrium. See how it's trading into the equilibrium? This is kind of doing, something similar. They're both at the equilibrium price point. And again, if this is going to continue to push higher, like we assume it should be able to do, we should also see a very similar reaction here. Right, we got stops being taken. We got an order block. So I would say that if we displace from here, I'd like to see this low get left. You see how this is to 75%, right? 50%, 100%. If we can get this low to stay intact, give us a response from this, get above this weekly inversion fair value gap, and then use it as support while breaking above this, creating a change in state of delivery, that'll put us in position to target this daily high, all these daily highs from the last couple of days. And then we got the gap here and then eventually up here. And this could be a market maker buy model. This would also, on maybe the 1 hour, if you go and look, this looks like it could be a market maker sell model. Okay, so we'll have to obviously continue to monitor how it's going to treat this. If it gets below this weekly fair value gap, closes below it, wicks up into it, or uses it as resistance, and then just, gives us a displacement, again, it could definitely reach for this low here if that was to take place. But then again, we have this as well to monitor. All right, and then we got the down wicks. So all of that would be used to justify a further run if it does show that it doesn't want to get above this fair value gap. So this is going to be very important for us to watch. And then, of course, that's also inside of this bullish weekly order block and the wick quadrants in here as well. Okay, but for now, just looking at this time frame, we don't have necessarily enough higher time frame information to believe that it's not going to just be going lower to go higher, especially if the yields rapidly reprice to the buy side. That's heavily influential for bullishness. But again, the correlation may get messed up because we have the end of the month or end of the year, right, going into a new quarter, and then of course all the economic stuff that's been taking place in the U.S. economy. So we cannot remove that from our mind. And if there's a crack in correlation, we know that it's being impacted by these things. And all that means is we got to lower our risk, and keep in mind what all these assets are doing, but we may have to use like maybe all three of these indices, right, to be our correlation. And then little moments in price will be in alignment with, the risk on, risk off behavior. But overall, it may be cracked. But at the time you're trading, if you're, say, bullish on the indices, and overall there's been a crack in correlation where DXY is dropping, but then you see DXY start to run to the buy side, and there's a potential buy side target or opportunity available in the indices, you can use the correlation here, and the macros obviously, with the small spurts of correlation that take place real time, even if it's cracked in correlation. It won't be always entirely cracked. Even in a crack in correlation, there's little flurries of price delivery that do show the correlation being in alignment. But overall, because of all the economic stuff and whatever else in the world is happening, it may have an impact. But you could still use it short term. It's just the long term may be impacted, and then we'll have to wait, for it to get in line, to fully have conviction behind. Maybe a reversal, right, or just the narrative in general. You just cut your risk, right? Just acknowledge the high risk. Let me see. Showing bias. I'm looking at the near candle highs. Yep. Yeah, gold's a mess. Gold's kind of a mess right now. It's kind of sporadic. We're kind of in a range right here. See the indecision candle? Chaos. Yeah, but we'll talk about gold in a second. So yeah, hopefully that makes sense as far as DXY is concerned. Look at all three perspectives. Go from weekly, so the weekly view, to the daily view. Okay. To the 1 hour view right here. So yeah, this would be a failed market maker sell model, like I said. If we do end up continuing within this weekly fair value gap, so that's what I'm going to watch. That's what I want to see. I want to see if we can't get above that weekly fair value gap. Above that would be pretty much up in here. Taking out this high fully confirms that that's being respected. And then, we could use this again as a market maker buy model. And we may end up being able to see this gap get targeted. But we have a long ways to go before we get up there. Do got relative equal lows down here. But yeah, it's going to have to really get back above this weekly fair value gap. Right, this move here, right, within this larger one on this 1 hour chart, we may see a smaller market maker buy model if we do end up getting above this. And then, of course, in that case, we could, continue to seek the buy side as long as everything stays within reason, right, and doesn't invalidate using some of the tactics that we talk about. So this high, we definitely want to pay attention to that and see if we can stay above this weekly fair value gap. If we do stay above it, perfect. We're going to keep going higher. We have equal highs up here, very easy, obvious to see targets. And then, of course, the yields, if they rally, they're confirming. And if we get below it, obviously, we'll have to look to see if it could be used as resistance and then try to go from there with that information. And if it does get below it, right, we could see how... Wait, did we see that on the... I don't know why this isn't on that time frame. Yeah, I don't know why I didn't copy to it. But yeah, so below this low, there's a daily fair value gap inversion that we used. So if it gets below this one and this one, we're definitely targeting the lows down here. If we stay below this one, my attention goes to this low, right? And this low and, this low here. Okay, so yeah, I guess that's pretty much all I really have to say about the DXY. Oh, one thing too, we're also inside this gap in here. So yeah, lots of layers in here. So again, if it gives it up and it comes back and inverts it, I mean, you could just see based on what we know, it'd be kind of common sense to then target this low, right? All the inversion levels, PD arrays not holding to go bullish when they should if it is going to be bullish. So there'd be no reason to force buys if we get down below this weekly fair value gap. Again, this is supported to be bullish because of the yields potentially rallying up to this and the bonds looking to decline potentially. So depending on how that unfolds, we'll see if it continues to confirm, okay? So yeah, do you guys have any questions about DXY? Fritz said we're still in a premium quarterly week. Yeah, you're right. You're right, Fritz. But yeah, we'll see how that wants to behave. Yeah, you guys got any questions? If you don't have any questions, throw one in the chat and we will move on to the currencies. All right, well, okay, perfect. So moving on to the currencies. If we're going to see the DXY hold and go higher, we're going to definitely want to observe this response. I pointed this out last week. I said I wanted to see it get up there. Obviously, the target was met. But again, we're going to have to obviously wait and see. We got SMT at the lows. If it inverts this gap in here, we've kind of already inverted this fair value gap on the euro. So we definitely want to monitor that. It's kind of interesting, right? How we've pretty aggressively traded away. Again, higher currencies will be supported if we get down below this fair value gap. You can start to see how important this fair value gap is, right? The specific area. We're at a point in time where it's going to make a decision. Otherwise, it's going to consolidate, right? It may just go, sideways. And we really don't want to see that, but we're not going to rule that out, especially this week. So if we see characteristics of like inside days or highs taken, then lows taken, no follow through, just comes back to equilibrium, we know that they're waiting for the NFP. I'm kind of concerned about the NFP coming out. Well, not concerned, but we're going to basically see some pretty crazy price delivery. Like this is going to rip people's face off because we're going to start to see information based on the damages that the shutdown caused, and that may be something that is not too friendly to the price delivery in the U.S. assets. And again, if there's something negative that happens to U.S. assets or the U.S. dollar, the assets opposed to it will rally. In that circumstance, because the U.S. dollar and the stock market is obviously US dollar based. Because everything has been affected by this, they all may be affected, right? They may all drop, right? They may all rally, you know, and it's kind of typical with the Kraken correlation, but it may be pretty exaggerated. So again, that's the environment that we're in. Why am I mentioning this over and over? Because you got to understand, as a trader, you need to know the condition. Just like a warrior in battle, you know, you got to understand if gunfire is going off or not. You know, I use that analogy all the time because it's just true. You know, let the gamblers and people that are TikTok brain mentality, let them go and blow their accounts and completely get slaughtered every day by doing reckless things. You know, you don't have to be in that camp, you know, especially when we're identifying reasons for something to be low probability or higher risk. And then you've seen it play out all the time. Especially in my private group, I'll say we're in low probability conditions. Price is going to be this or price is going to be that. I do it on Tuesdays too here on YouTube. You know, sometimes I'll say it's low probability. Then you fast forward the rest of the session. Maybe there was one little displacement, but for the rest of the session, it's sideways, right? That's happened, I think, at least 4 times on YouTube in the last 2 months, right? When I hopped on for the YouTube live and mentioned it, right? So there's validity with what we're talking about condition wise. And if you're new, you don't want to take needless risk when you could relax, right? And don't ever overtrade in general anyway, but especially right now. And again, we're going to start the week, or we're going to engage the whole week with lower risk than normal. So whether that's 50%, whether that's 0.75%, right, of your normal risk, you obviously got to be the determining entity for that. But yeah, I recommend you definitely save some, especially if you've had a good year, if you've had a good last couple months, maybe you had a good week last week. I wouldn't risk as much as you were risking last week because, again, it's NFP. It's the way it is, right? So yeah, my line in the sand is going to be this, at least for the GBP. And if we could stay above this level here on the euro, and we can see DXY drop, obviously that would be a positive influence for this. It'd also be positive for the SMT to be confirmed. If DXY is going to rally and the yields in DXY are going to be trustworthy and be in a healthy environment, then again, we should see this hold and go higher. If that is the case, then this will be impacted significantly. This will hold and drop lower. Okay. So yeah, we gotta see what DXY is going to want to do here. Like I said, we're at a turning point in price, right, or a critical decision point in price within this price delivery here, within this range. You know, it's going to have an impact on these assets and, you know, pretty much every asset related to the U.S. dollar. All right, and of course, if this is going to keep going lower, all we did was retrace into this daily fair value gap to then decline. So I say if we break down below this swing low, we have an order block, a swing low, and another order block here. And of course, the response originated from this here. I want to show something real quick. So do you notice how from this low, the wick down, the price delivery that delivered lower, coupled with this gap in here, you see how this gap did not get traded into, right? Price spent a lot of time below this low or close to it when it retraced back into it, leaving the gap up here. That is very significant, right? This is something that happens all the time when it comes to gaps being left open. If there was already trading prior to the candle, right, or at least in close proximity to the displacement candle like this, the imbalance, many times if it's coupled with, again, price delivery like this, lower, higher, and then it displaces, wherever price delivered previously, when you could place that inside the gap, like in this case, the upper portion should be left available because it's a balanced price range. It's already offered price at that level enough, right? So you'd expect that price is going to, you know, maybe not even come back too deep into that. But if it does, right, and it shows that this is not, you know, maybe this is too far away, right? if it trades into it a little bit, but still leaves a piece open and delivers lower, it'll be because we did have this here. This is more recent, right? And then it's followed by displacement. So this is the real fair value gap, right? This is obviously the gap, right? The fair value gap itself, the entire range. But when you're looking for the most responsive level in a fair value gap, say for a short, and you do see something like this where some of it's overtaken by a wick, this little piece of it is where you want to see price trade into and respond from. Because if there's a wick like this, taken with a fair value gap, again, it's going to create a variation of a balanced price range. Because it offered sell side, buy side, sell side aggressively, but it's already offered buy side there. So it won't always have to come back up into that unless it's potentially going to invert the whole gap and turn around and go the other way. So when you're looking at fair value gaps like this, if this was the 1 minute chart, I'd be thinking the same thing, just for context. You know, again, this is all universal. It's not just because we're on the daily chart. All right, so yeah, keep that in mind. So I'm going to have that highlighted. I'm going to still look at this, consider this. We got a low. Let me see. We got a low, high, lower, low. So we do got the down movement here, like I said. So we definitely want to keep tabs on that. And if it never trades back into this and just dumps, that's, you know, the low here, the delivery lower, higher, lower. This being a potential breaker will be the reason it doesn't have to go up there, especially if DXY looks to rally aggressively. Then we got the daily fair value gap here too on the 3-day. Okay, so it did trade into this one a little bit, right? So again, if we go back to the normal daily chart, I will be certain that we're going to go lower, and shorts will be back in line, like timing wise, if we can break down below this. And it'll just have more confirmation if we wait for it to take out this low to confirm that it's going to then target deeper levels. See this breaker here, right? High, low, higher, high. The downturn ran into that breaker and it used it as a counterparty or a counter trend trade opposed to the down movement. Okay, so we do got the SMT, like I said, so we'll keep that in mind. We do have this gap in here, so we're kind of trapped on the GBP asset between these two, right? These two overlapping fair value gaps, and then this bearish fair value gap here too. Actually make a distinction. All right, so we'll see. All right, if it gets above this, if it treats this as a balanced price range bullish, if it respects this bullish order block, right? When we're up here, you can tell we have a lot behind us supporting the buy side delivery. Okay, and then of course, if we can see DXY drop, if this happens, then again, it's starting to really confirm that we are going to go that to the buy side, towards that direction up here. All right, we got trend line liquidity, right? But that'll be for later if we get up there. We're not going to assume that at the moment. All right, so yeah, we got to watch what this is going to do here. Reactive level was here on the weekly wick for the euro. And I mean, you can see how beautiful that response was when it inverted this, kind of got above it. So sell side, buy side. It's going to have to break down below this daily fair value gap for the euro if we're going to see price target the sell side. Otherwise, it's going to use it as support and rally. And just like over here, how if it gets above this, it may look to go higher. Both of those will be fully confirmed if DXY can drop if that takes place. Okay? But if not, again, taking out this low, taking out this fair value gap with a bullish DXY, that puts us in line to really target pretty deep sell side liquidity. So we're going to look at that until we figure out what DXY is going to fully do, right? See which scenario it's going to really get behind. And we're leaning more towards bullish DXY because of what the yields are doing until proven otherwise. But we have our contingency plan and levels of invalidation, right? Breaking down below this, inverting it, and then targeting the low down here, or breaking up above it, targeting the high here of the fair value gap, and then rallying up. I'm going to favor that scenario until proven otherwise. And again, if it does prove otherwise, we have a game plan to get in line with that as well. Sometimes you got to be flexible, especially when we're at equilibrium. But again, we're favoring buy side mainly for the DXY. And that's because, like I said, the bonds and yields are showing us a pretty clear picture. And we'll see what it does when it gets up here and how that influences DXY. And then everything else, right? So hopefully that makes sense. Hopefully all the assets we've covered and topics we've covered has made sense. Let me know in the chat if you have any questions. Let me know if it's made sense so far. And let me know how you guys are feeling too. Hopefully you guys are energized waiting for the week. It's a weekly FVG too. It's the real FVG. Yeah. It's ICT mentioned it, but again, it's one of those things that goes over people's heads. There's just so much information, so it's just like one of those little tucked in gems that ICT's mentioned. He only mentioned it one time about that topic. So if I wasn't there watching, if people weren't there watching, it's a little unfortunate that it's something that most people won't know. Okay, Fritz, thank you. Appreciate it. Again, if you guys get value from the content, just a final reminder, don't forget to like the video. It tells me that you guys find value in what it is that I do. And you guys are hopefully making progress. So yeah, definitely don't forget to like the video, subscribe to the channel. If you guys spread the word as well, that'd be great. If you have any friends in real life or friends that you hang out with on the internet, anyone that you think can benefit from being a part of this community, or anyone that can bring value to the community as ICT traders, or just, good traders in general, definitely give them an invite. Everybody's welcome. New trader, they're welcome up to, however long. I have a mixture of ages and experience. I have a floor trader that literally just joined the private group not too long ago, which was pretty fascinating. He's the second floor trader that came to me, which I'm grateful for. It's definitely not something I thought would have ever been the case. So yeah, if y'all could help me spread the word and spread this blessing, and definitely like the video, subscribe to the channel, that would be much appreciated. So thank you guys in advance. So yeah, we finally made it, right? Come over here to the indices. So, looking at the monthly. So it's the weekly. Let's see. See, it's pretty interesting. Is that the weekly wick or the monthly wick? Go over my thing. Why don't I have the... So yeah, we'll put that there. So that's the monthly wick. There's the monthly wick. All right, so also got the, actually let me remove that. So now we got the monthly wick. We now also have our weekly wick. All right. I don't know where my monthly template went, Could have swore I made one. You definitely want to color code these, maybe make them a little bit thicker on the time frames that are a little larger, because it's very easy to get lost, right? It's very easy to get lost in the analysis, especially when you're trying to mark off everything as a new trader. You don't have to have things be so busy later on. Maybe you will, right? But you definitely want to, when you're training yourself, you want to make sure you have this stuff identified and noted, at least screenshotted and saved somewhere, or write down certain price levels, or whatever you choose to do. You want to make sure you have things accounted for. All right, so yeah, we got this wick in here. Like I was saying earlier, yeah, like I said earlier, if we're thinking power 3, if we are going to see the yields go higher and the bonds go lower, that may set the stage for this to run higher, take this out, like I mentioned, like at the start of the call. Maybe open up, use some of the news events in here to get us up into that to one of these levels. Maybe it takes Friday's high, maybe it doesn't. But if it does take Friday's high, we would not want to see it go too deep into this order block. I wouldn't be surprised if it does run up there, take that, and then start attacking this wick too. But targeting wise, this one would probably be pretty useful. And then of course the low, and then the 50% of this monthly wick. That would be a potential target for us to aim at. Let me see. YM took previous month's high. Yes, MQ did. Yeah, there's an S&T, right? We have that marked right here. So we're going to have to obviously see. We have had a second change in state of delivery. One change in state here, and then we had the run up here, and then a violation of that. Plus we had this get invalidated too, and it never closed outside of the order block, right? It did get up above this a little bit, but I think it was just to come up and retrade into this gap in here again, which is also liquidity void. There's no liquidity in there, like we talked about in great detail. I think we talked about it in my private group. I think I mentioned it though on YouTube last week, or maybe a week before too. So like the last 2 weeks we've had this identified and used it as a target. Before, when we got up here after the fractal high formed, remember? So yeah. So my opinion on this, right? We got the low here, Friday's low, Friday's high. And if we're thinking power 3, since we have an assumption that DXY may look to go higher, if we do get that, again, it just justifies this run up if it does want to go up and take this, just to go lower, supported by DXY, supported by bonds going lower, supported by yields going higher, which again influences bullish DXY. And of course the one change in state, secondary change in state. And then of course we got the potential relative equal lows here that could maybe be targeted. And on this weekly chart, if that type of thing does happen, again, 50% of this gets taken and closed below, we may be able to see a targeting of this low. There's a little gap in here too, if you didn't notice. It's kind of small, very tiny. So, if we do get down below this, we could definitely target that. But yeah. So got this weekly bullish order block to watch too. Where is, there it is. So yeah, we got that wick, we got the weekly bullish order block. We also have this one too, this wick. So I'm gonna actually put that up. I'm not going to drag it to the price action because it's going to be a little too much. Whoops. Whoa, what the heck? All right. And so we'll keep that in mind as well. So yeah, we're either going to see something like this. If DXY does choose to go higher, we may see something like this. It may have like one or two, maybe Sunday. Monday punches up, sends a wick through it, and then declines. And then we can then target all these different levels down here in this wick from Friday's low. All right. So the start of the week, if we do see that this is going to be something that's reasonable to target Friday's high, we may be able to map out a buy that then sets up a market maker sell model, right, for the rest of the week. Assuming that, NFP is going to be able to get us through a pretty significant level. I think we're going to have dynamic price delivery for NFP because all the built up damage, we're just going to start to feel it. We've started to feel it here. But now, the shutdown for 40 days was, they're starting to discover that it was really, really bad. More than it's being portrayed. So we may be in for a little snowball down, maybe to come in, again, purge some of this, but we'll take it day by day. This is a pretty heavy decline. We got the fair value gap in here. Got this fair value gap on the daily. So we'll see how that wants to behave. And again, if we close above the 50% of this order block, if we close outside of this wick, right, we get up here. And of course, it's pretty obvious, right? If we do take out this high is going to lead us to targeting this high. And then shorts will be very short-lived. Again, we do got SMT here at the lows. So we definitely want to monitor that. We do got this equal lows down here that's kind of suspect. So again, if DXY rallies, this SMT, because we use DXY to validate in many cases, what SMT is going to be respected through using the DXY relationship with the indices and the bonds and yields. So we'll use that here. And if DXY does get above this and starts to race, if the SMT that's at the lows here is present at that time, we're not going to be overwhelmingly concerned about it. Okay, and then we'll just continue to target this as actually a low resistance liquidity run, especially this. And we may slide it down into there. So we'll observe bearish power 3 for the week, right? Just go up, reach for a premium array, get above the open price, and see if we can't get it to start to tip over towards the later portions of the week. And then, of course, ultimately into the NFP. And again, line in the sand is here. If it gets above this, that's when we would start to trigger in, okay, well, we're probably short-lived in this decline. This was all probably just from the shutdown. And if DXY was to decline too while we broke up above this, then again, what reason would we have to force a short? It's showing signs that we have a likelihood of going lower. That's why we're going to support something like this, right? Opening up and maybe peaking above the high there, and then maybe we see some type of movement like this. Sunday, Monday, Tuesday, Wednesday. Maybe something like this, right? Maybe it hangs around in here. And then NFP just bang, right? Or we may see something like this take place and then bang with NFP. So because of NFP's dynamic damage that it causes or can cause, this is the type of stuff that we got to be very cautious of, right? But first and foremost, bearish power 3. If we do open up and decline, we're going to watch the wick in here, see if it can respect it. We've got to watch this one too. If it violates all of that, my attention will be on Friday's low as a target. And then we'll see how it behaves down there, especially if this gets targeted. like quickly going into NFP Thursday, that may trigger a response to go against them, at least short term. But again, we're going to have to obviously wait and see what happens there. But I'm preferring this, right? Higher to go lower. But again, the line in the sand is right there with what I just mentioned. All right. So yeah, hopefully all that makes sense. That's about it, right? As far as what we're looking at. I do want to take a look at gold real fast. Let me look at the chat real quick. FAR has new wick opening gap inside fair value gap. It's only been wicked into. Yeah, the wick into it's fine. If it wicks through it, to and through it, that's already traded both sides of the market. So it doesn't necessarily have to come back down into it. There is a downside target, right? So, if it is going to go down, right, we did talk about the gap that's still available down here. But again, before it gets down there, we're going to have to break through these levels first. Before this is targeted, Friday's low needs to be targeted before anything. Because if it can't even get down to here, this is kind of meaningless down here. And if DXY goes higher, right, I just drew that big candle, right? I drew it right to here, or maybe even beyond that, right? So that could be a possibility. So you can mark that off. I think I have it marked off on this chart. Yeah. On the execution chart that I use. So yeah, the gap's definitely it's definitely something to monitor because we have trading in there too. Kind of traded into it a little bit. We still have a little bit of it open. So all of that. We've had this gap up here highlighted and this one as well. And price, it's kind of danced in between that range. So these are going to have to be targeted. Those are the most inefficient price delivery out of all the price delivery because they're literally gaps, like where no trading was, right? Regular trading hours gaps, right? So yeah, we'll see. We'll see if we can't open up, target some of this. This is going to be a fair value gap in here too when the new candle opens. So we got Friday's low, Friday's high. Let me mark that off. On this chart, marked on the other chart. I'd be forgetting to add the markups that I do on that 3 indices chart. And I'm like wondering why things disappear when they're not disappearing. I'm just forgetting to write it down or note it. Let me pull this over a little bit. So yeah, we'll keep tabs on that. Again, if it trades through that, this will act as a balanced price range. So we wouldn't even really need to have it come back into that. And again, that would just set the stage for us to really, really dive. I would prefer to see them run up into this, target the high up here, because we want a stop hunt. We want opposing liquidity. And for the overall week, I would love to see Friday's high taken as a counterparty to then decline. Because I mean that's a textbook, bearish power 3 idea. Sunday, Monday runs up into Friday's high or some other previous day or previous week's high, or with another PD array, runs up into it, stop hunt, and then Tuesday, Wednesday, either runs up one more time to then decline for till Thursday, or it'll just wick up there, take it, and then go, or hit another PD array. Same thing for bullishness too, right? It's amazing, especially when there's a fair value gap in here and it's Friday's high. Merging those two together with bearish power 3 or if you flip it around, bullish power 3. That's one of my number one plays in my playbook. When I see that unfolding, which is what I'd like to see here, it's just bread and butter. It's so easy visually to see, and it was amazing. Or it is amazing. Okay, so hopefully all this makes sense. This is pretty much all I really got to say about the indices. Let me just remove some of this stuff. We did have SMT here, so that also led to the decline. And again, if DXY rallies, that's beautiful, and that's what we'll like to see. And then we'll target the highs up here. See bearish indices, bearish foreign currencies. Bullish dollar would create a bearish idea for gold, right? So, we'll kind of monitor what this wants to do. If it inverts this gap here, we could be pretty certain that we're probably going to attempt to come down here once more. We got relative equal lows here, and we got some trend line liquidity there as well. Okay, so we'll see. And if it stays above this, use it as support, displaces, taking out the 50% of this order block, we'll target the high up here and then target these highs up here too. Okay, so that's a down and dirty observation for gold, right? New week opening gap, new week opening gap, new week opening gap. So getting above those levels, that's multiple new week opening gaps plus an invalidated order block, bearish, plus a validated fair value gap, bullish, after a stop run. So if you think about it, YouTube model, run on stops, okay? Run on stops, shift in market structure, fair value gap, retracement to the fair value gap, possible delivery to the buy side. And then, of course, if it invalidates this, right, goes down like this, comes back in, never gets above it, maybe does something like this, then we could target that low. Yeah, that was nasty, huh? All right, so yeah. So that's essentially everything I'd like to talk about today in terms of the chart. Let me go check the chat. I understand. Like I said, how was the concert? Yeah, dude. Man. That concert last night was amazing. Man, I haven't really been to a lot of concerts in my life, but going to a concert where it's just thousands of people and an artist that's spending the whole entire 3 or 4 hours praising God in the way that he can do, in I don't know, it's unique. Gospel music is a lot of times okay, kind of boring vibe in some cases, right? It's not necessarily super energetic, but man, if you guys don't listen to Brandon Lake, you should. And if you could ever go to a concert, you should. I literally got tickets for tonight. I might go tonight as well. We'll have to see. It's a little bit late. We got stuff to do on tomorrow morning, so I don't know if I'll... Maybe I'll go. Possibly. I already got the tickets. Right. So, I don't know. But yeah, I encourage you guys to go. So... if any of you guys lived in California or close to me, shoot, I'd transfer the tickets to you. I have 2 tickets. So if any of you guys know anybody that's in the Bay Area, because it's at the SAP Center. I was in Sacramento yesterday. But if you guys know anybody, DM me, right? Starts at 7 Pacific Standard Time. And I could transfer it to them. Otherwise, I'll have to figure out what I'm trying to do. But yeah, it was amazing. Appreciate you asking, Mike. I encourage all of you to go check out his stuff. Brandon Lake he's one of a kind, that's for sure. I haven't really had any celebrities that I could deal with, right? In terms of the music industry, they're all toxic. They're all like pretty demonic, evil, toxicity type of vibe. But this guy is different. He's way different. It's different gospel music. It's like a rock star brings things to gospel music, but then he's got like slow. I mean, it's just, if you go look at my Instagram, I post a lot of videos about it. He's reading Bible verses. We're just sitting. It's like a full worship, like a crazy church vibe, but it's not a church vibe. It's like a rock star show with a super talented, energetic, amazing artist, but then everybody's literally there worshiping God. It was definitely a very unique, one of a kind experience. I never had something like that before. But yeah, it's pretty amazing. Pretty amazing. And thank you, trading, right? I was able to buy the tickets because of trading. You know, just perks. You got to be able to do things that you want to do without thinking about how much it was. You know, without really worrying about it. You know. So, thank you, God. Thank you, trading, right? And you guys will have the same thanks as well, I'm sure. But yeah, I'm sure I've talked your guys' ears off. Appreciate your guys' time. Hopefully you got value from today. Let me know if you guys have any questions. As always, I'm here to help. You know, I got love for each and every one of you. I want to see you succeed. I want to see you thrive and do well. And, you know, maybe next time you'll buy concert tickets with the things you make from trading or whatever else you enjoy doing or plan to do. Right? So lots of stuff to look forward to. Let's end the year strong. Let's have the right mindset. Let's not be reckless. Let's not do anything stupid ahead of the year that's coming ahead of us. It's going to be a crazy year next year. Absolutely off the hook. It's going to be insane. So we want to be prepared and solvent and ready to go when the time comes. All December, we're going to be doing prep, overall prep in terms of process in the private group. So if you're not in the private group, definitely check out the link in the bio. Look at some of the details. It's an apprenticeship. You get to work one-on-one with me. There's 4 days for the enrollment for the one-on-one. If you just want to be part of the community and be part of the live calls as a group, that's always available. But to work with me one-on-one, I have to have my schedule organized enough that I can put as much effort as I can into the students who believe in me in that way. Or not even believe in me, but want that one-on-one hand-holding experience. All right, so that's always available 4 times a year. Every quarter, I open it up because I have to have the schedule open. I have to be able to have time with the students, you know, because I'm not a half-ass mentor. You know, I sit for hours. One call I did with a one-on-one student, it was like 6.5 hours. It was an intense call. We didn't realize it was 6 hours. I didn't realize because, you know, we were just enjoying each other's company and, you know, just really, you know, building that relationship, building the skill set, answering any and all questions as a mentor should be willing to do, but most aren't. But yeah, if that's something that, you know, you feel is beneficial to you, it's available 4 times a year, every quarter, depending on, you know, how many students I have. I can only do 20 a year. I already have 16 lined up. So, you know, there's 4 slots left. So, Mike said, I can confirm Chris is giving away so much time, information. Let's see anyone else doing it. Yeah. Yeah, I appreciate you saying that, brother. I appreciate that. I definitely do try, man. I definitely do try to make it so your time's not wasted. Because I know my time was wasted and I was disgusted. Realizing that months of work that I did with somebody that sounded like they knew what they were doing. Come to find out they don't know a damn thing. And they can't do anything they're claiming. You know. That was $24,000 down in a hole with money I didn't even have. Yet, you know, it was just a waste of time. So that's why I try to pour in as much as I can. whether you're here on YouTube or if you're with me on a one-on-one call, or if you're with the the private group, just with the whole group. Whichever route you choose to take to use what it is that I try to share with you guys, there's going to be value regardless of what your decision is. And it doesn't matter what decision you make, what capacity you choose to support the channel or support me as a mentor, or whatever capacity you choose to engage with the community, you're still going to give value. You're just as important as anyone else. No one is more important than others. So yeah, let's keep growing. Let's keep improving. Let's keep getting you guys across the finish line. Every week there's a new success story, it seems, the whole year. It's been pretty incredible. And I couldn't be more grateful. So again, I appreciate you guys for your time. Thank you for hopping on every week. It's definitely appreciated. Mike said, that's not mentioning so many videos teaching templates every day. Yeah. Between live streams and the one-on-one calls, I mean, I'm literally doing something every day with somebody. Somebody's getting value 7 days a week. Like, it's a lot of the same students too. So. And what do you know? Those students are making a ton of progress. Even the ones that show up here on YouTube, regularly every week, like Tony, like Fritz, like numerous others. They're making progress. And it's just a blessing. And I'm grateful that I could share this with you guys. And you guys are getting value from it, because I'm passing the blessing along, and I hope one day you guys can do the same in the same capacity, right? Potentially, right? Whether it's with your family or with people that maybe come to you. Maybe you end up inspiring someone else because of what you've learned here and through ICT's concepts. That's kind of the goal. That's what ICT has tried to condition us to do. That's the type of people that he's trying to cultivate. It's the type of mindset that he wants his community, his students to have. Pass the blessing forward if you can. And if it's only in your family, hey, that's enough. You followed up on your part of the agreement, that transaction, right? But yeah, just know that the industry will always need level-headed, not flamboyant, good educators that actually know what the hell they're doing and can prove it. We're a minority in the community, in the group, like in the industry of traders. Someone that knows what they're doing, people that understand where it's going, how to engage, how to think properly, what to expect, how to calibrate yourself properly and act like a professional, treating this like a business. The people that think that way are a minority in the industry. So as a result, there's always going to be room for you to also pass the blessing along to someone that may be, a couple steps behind you, And I think it's a very noble thing for us to reach back and pull people up in one capacity or another, So I encourage you guys to do that, as ICT encouraged me and all his students to do, And it's an amazing thing to see how many are coming out. I mean, it's truly amazing. Just in general, right? In the whole ICT family, let alone in this, in our little corner of the internet, right? Right. So yeah, trading industry is very difficult. Yeah, it's a cheat code. It's just like if you go do construction, and you have an apprentice or a journeyman, right? Who's teaching you the ins and outs of how to build this house or how to do this plumbing project or how to do HVAC. If you're reading a book or watching a video, I mean, you could learn it, but hands-on, being able to get the intricate details and different scenarios, because things are not always exactly the same, and where things fit together and how to use them, how to think properly, all that stuff. If you're able to witness someone doing it daily, which I'm literally live 7 days a week almost, pretty much all the time now, because I get more requests for one-on-ones or group calls on Saturdays now, which I'm pretty grateful for, because going live and teaching you guys is not something that really bothers me. I enjoy it because I know that we may talk about one thing and then all of a sudden it clicks, and then next thing you know, you're sending me and everyone your testimonial, telling me how this has helped you, how God's blessed you, and that's something that we should all really think about and appreciate. So. But yeah, I think I've talked your guys' ears off, right? So thank you guys again for always supporting the channel. Let me know if you guys have any questions. We'll be live again here on YouTube on Tuesday this coming week. And probably be about 7 a.m. And those of you in my private group, you already know the vibes. We're up every single day, 3 a.m. You can obviously hop on later. That's me. I wake up at 3 a.m. every day. But yeah, just let me know if you guys want to hop on in my private group tomorrow. Those of you in the free Discord, I'll be obviously sending out markups, kind of giving the gist of what it is that I'm looking for. And hopefully that can help you guys. And of course, again, if you have any questions, I'm more than happy to communicate through DMs and whatever way, right? So yeah, with that being said, God bless you guys. Thanks again, and I will catch you beautiful people on the next one. Have a good rest of your